Between 2021 and today, borrowing power in Australia has taken a huge hit. You might be saying these numbers don't quite add up, but back in the pandemic era when the mortgage rates were at rock bottom, Australians could borrow massive amounts. Fast forward today, over the last 2-3 years, the RBA has hiked rates 13 times, dropped them once, pushed the cash rate from near zero to over 4%, and forced the banks to increase their stress test to a 3% buffer. It was previously 2.5% before. What does that mean in real terms? One analyst has suggested that the income you'd need to afford a mortgage comfortably has increased by 37% over the last 2 years. In practical terms, this means if you could borrow, say, $1 million back then a couple of years ago, right now you might only be able to borrow $700,000 to $780,000. That's a reduction of 20 to 30% or more in your borrowing capacity. And in the meantime, property prices have increased, so it's a double whammy really. So if you haven't updated your borrowing calculations since the ultra low rates in 2021, you might be in for a little bit of a surprise when you see the numbers today. But it's not to say that you can't still buy in the current market.